Is this the end of banking as we know it? That's what the governor of the Bank of England is preparing for. After years and years of warning against crypto, Andrew Bailey just did a complete reversal, basically saying it will be wrong to bet against stablecoins. So, what changed? He saw a technology that moves more money than Visa and MasterCard combined, that settles in, say, 30 seconds instead of 3 days, and that costs as little as 50p instead of, say, as much as £35. And UK banks, they are frantically testing it right now because they know what's coming. Here's what you need to know. You know that feeling when you send £500 abroad to, and only say £465 arrives about 3 days later? That £35 that you just lost, well, that's about to disappear. Not eventually, I mean in like 2026. In this video, I will tell you about the technology replacing international banking, why regulators finally caved and acknowledged it, and what it means for every payment that you make from 2026 onwards. So here's what Bailey saw that made him realize banking is about to change. The traditional system, the one that takes your £35, it isn't just expensive, it's slow because it's fundamentally broken. You see, most people think of a bank as, just one thing, a place to keep your money. But a bank provides a bundle of services. You go there to store money, you go there to send money, to convert currency and borrow. And these services they are bundled together, not because it's the best way, but because for decades, banks were the only institutions that were licensed to do all of these at once. Now, here's the thing. There used to be a lot of competition. In 1984, the UK had around 600 banks with just over 14,000 branches. Today, circa 285 banks and under 7,000 branches. Fewer banks means less competition. And, well, when competition drops, guess what happens to prices? So let me show you where your money actually goes when you send that £500 to India. Your bank charges a sending fee, £20 to £25. Then there's a correspondent bank fee, that's another £12. But here's the real trick, the exchange rate markup. Banks don't just give you the real rate, they give you their rate. And that difference, another 3 to 5% on top. So your £500 transfer, you're losing £30 to £40 minimum. And it takes 3 to 5 days to arrive. Yeah, 3 to 5 days for your money to just sit there going through correspondent banks and clearing houses. Now, you might be thinking, well, I've got faster payments, my UK transfers are instant. And you're right. Faster payment is brilliant. 24/7 real time, instant settlement. Genuinely one of the best domestic payments in the whole world. But it only works within the UK. You can't use it for Poland, you can't use it for India or anywhere else outside Britain. For international payments, you are right back to the old system. SWIFT, correspondent banks, days of waiting, fees stacking up. And this is where the governor of the Bank of England, Andrew Bailey, started to pay attention because while UK banks were closing branches and charging £35 for a £500 transfer, something else was happening. A technology that moves money across borders in seconds, not days, for pennies and not pounds. And it's not coming, it's already here, moving up to £18 trillion a year. So what exactly did Andrew Bailey see that made him completely reverse course? Well, let me show you the numbers he was looking at. The global stablecoin market is now worth over $280 billion. In 2024 alone, stablecoins moved about 18.4 trillion in value. That's more than Visa and MasterCard combined. And here's the bit that should terrify UK regulators. The UK has no major player in this market. None. Zero. The biggest stablecoin, Tether, USDT, that's American, backed by US dollars. The second biggest, Circle's USDC, also American, also US dollars. And so while the world is moving trillions of pounds on digital dollars, well, where's the digital pound? And it only gets worse. In July 2025, the United States passed the Genius Act. It's a digital framework that makes stablecoins legal, regulated payment instruments in America. The European Union, well, they passed MiCA, Markets in Crypto Assets Regulations, which went live in 2024. They're already ahead. And the UK, well, we've been consulting, reviewing, taking a cautious approach. But here's what really made Bailey pay attention. In September 2025, Imperial College London published a report with this headline: "The UK must adopt stablecoin or risk losing their financial crown." The report warned against something called digital dollarization. And this is the nightmare scenario. You see, if the UK doesn't have its own trusted, liquid, pound-backed stablecoin, what do you think UK businesses are going to use for digital commerce? They're going to use USDC, American digital dollars. So your UK business, trading online, will slowly start pricing things in digital dollars, holding reserves in digital dollars, paying their suppliers in digital dollars. And over time, the US dollar embeds itself into the UK digital economy. We lose monetary sovereignty, not through war or policy, but through convenience. Bailey would have studied Argentina, where about 60% of crypto transactions are now in USD stablecoins because their peso collapsed. He would have seen the situation in Nigeria and in Turkey, where countries that the citizens abandoned their own currency and use digital dollars instead. And he would have realized if we don't act, the same could happen here. Not because the pound collapsed, but because we were too slow and too cautious and let American tech companies become the default rails for digital money. So, in October, Bailey changed his tune because he had to. The FCA is writing the rule book right now, what's legal and what's not, who can operate. They go live in 2026. HSBC, Barclays, Lloyds, all the big banks, they're all testing this technology. But before I show you what it is and how it works, you're probably thinking to yourself, well, does this actually work? Or is this just, tech hype and regulatory theater? Well, let me show you where this went from theory to a survival tool. So Argentina. Now, last year, inflation peaked at 290%. Yeah, you heard that. 290%. Your savings will lose half their value in months. And for years, Argentina had strict capital controls. You couldn't just walk into a bank and get US dollars. The government wouldn't let you. So what did ordinary Argentinians do? They turned to digital dollars, stablecoins pegged to the USD. And today, 60% of all crypto transactions in Argentina use them. Not Bitcoin, not some, speculative assets. Just digital dollars that hold their value while the peso collapses. For millions of people there, stablecoins aren't some cool financial tech. They're a lifeline. The only way to protect what they've earned from being inflated away overnight. Now, I'm not saying the UK is Argentina, it's not. The pound is stable. But that's not the point. The point is that once you've used a payment system that settles in 30 seconds and costs 50p, going back to a system that takes 3 days and costs £25 feels absolutely insane. And that's what's starting to happen here. The UK sends about £9.3 billion in remittances every year, mostly to India, Pakistan, Nigeria, Poland. If even 20% of that moved to stablecoins, we're talking about hundreds of millions of pounds saved annually by UK residents. Money that currently goes to banks, staying with the people who actually earned it. And it's not just individuals. UK small businesses collectively lost about 2.8 billion to hidden, foreign exchange fees in 2023. That's small businesses paying suppliers abroad, receiving payments from international clients, getting gouged on exchange rates that they don't even realize they're paying. Stablecoins could cut that by 50 to 70%. So the technology works. It's not common. It's already processing, like I said, 18 trillion a year. And that's what made Bailey realize this isn't about whether stablecoins work. They work. The question is whether the UK gets left behind while the rest of the world moves on. So what exactly are these things, and how can they move money in 30 seconds while your bank takes 3 days? Right. A stablecoin is a digital token that represents real currency. Think of it like a digital pound coin stored in your phone. Its value stays at roughly £1 because it's backed by real reserves, actual cash or government bonds sitting in a bank vault somewhere. You can send it to anyone, anywhere in seconds for pennies in fees. Now, here's what happens when you use one. Say you want to send money from the UK to someone in Poland. Normally, you'd use your bank, pay £20 in fees, wait a day or two, and then your recipient gets zloty at whatever exchange rate the bank decides. With a stablecoin, you'd buy USDC with your pounds through an exchange that costs you maybe 1% to 1.5%. And then you send that stablecoin to your recipient in Poland. That transfer happens in minutes, sometimes in seconds, and costs pennies, literally 50p or less. And then your recipient converts that stablecoin to zloty on their end, and another 1% fee. So the total cost is probably about 2 to 3%, and it arrives in under an hour. Compare that to 5 to 7% and 2 days with a traditional bank. And here's what should worry UK regulators. If Visa makes USDC the default cross-border payment, well, every UK business that uses Visa starts transacting in digital dollars by default. Not by choice, by convenience. That's digital dollarization in action. So what are UK banks doing about it? They are building tokenized deposits, basically blockchain-enabled bank accounts. Why? Because they can't compete with stablecoins on cost or speed. But they can keep you as their customer by offering the same technology wrapped in the safety of a bank account. FSCS protection, familiar interface, your money never leaves the bank. It's a defensive play. And here's their problem. Tokenized deposits only work within their own network. If your supplier uses a different bank, you are back to traditional rails. Stablecoins work across any network, any bank, any border. That's the competitive advantage. Whoever wins controls the rails for digital money in the next decade. And that advantage, well, it's about to become available to you in 2026. Right, so what does this mean for you? If you send money internationally, family, freelance, suppliers, your cost just dropped by 60% to 70%. That's not a prediction. That's what's launching in 2026 when FCA regulations go live. For the 3 million UK residents that send remittances abroad, that's hundreds of millions of pounds staying in their pockets instead of going to the banks. For the 5 million UK freelancers working with international clients, that's instant payment instead of waiting a week for wires to clear. And for small businesses, the 2.8 billion that they lose to foreign exchange fees in 2023 gets cut in half. That's real money. That's cash flow. That's the difference between profitability and struggling. Now, for domestic UK payments, nothing changes. Faster payments already works brilliantly for pounds moving within Britain. Stablecoins can't beat that. But for international payments, the past has always been slow, expensive, and frustrating. Well, that's been replaced entirely. You might not hold stablecoins directly. You might just notice that your Revolut app offers a fast-track international option that costs 80% less. But under the hood, it's routing through USDC or a UK stablecoin. But the result is the same. The £35 that you've been paying disappears. Bailey's reversal wasn't about loving crypto, no. It was about accepting that this technology works. Other countries are adopting it, and if the UK doesn't regulate it properly, we will lose control of our own digital economy. So the UK banking system isn't ending. It's being forced to compete. And when banks have to compete on speed and cost, well, you and me both win. This slow, expensive part of banking, cross-border payments, is about to become faster and cheaper. And when it does, don't be the last person to know. So please like the video if you want to see more, and subscribe so that you are ready when the rules change in 2026. I'll see you in the next one. Bye.